What if you could invest like a billionaire, but get paid dividends on your portfolio? That is the goal of this new Target 15 ETF by VistaShares. It's going to copy the holdings of the famous Stanley Druckenmiller, who is a multi-billion-dollar investor, and give us income at the same time. I hope you guys are as interested in this as I am. So before we get into the video, don't forget to like and subscribe, and we'll roll that intro. So we are going to cover three main concepts in this video, with the third being the most important. But firstly, I want to showcase this fund specifically, how it works, and who the target audience is. Then we're going to cover exactly what made Stanley Druckenmiller so famous and so influential in the financial world. I will say I've looked into a lot of very rich people, and his style of investments, they're very unique, and he made money outside of just the stock market, which just shows how intelligent this man is when it comes to all things financial. And last but not least, we're going to look at his top holdings in his portfolio and compare them to each other to see what is making him the most money currently. And a lot of these holdings will be in this fund specifically. So I hope you guys are ready. Let's get into it. I also want to showcase, I'm always transparent, this is a paid sponsorship by VistaShares. I really appreciate that they reach out to me to get more eyes on their ETFs. Now, of course, DRKY is not even out yet. We haven't tracked the performance, but they like to use YouTube as basically a commercial, which I agree with because I love talking about new funds. So it's a very easy fix. And I know you guys love hearing about new funds. All that being said, I'm going to be impartial simply because we haven't even seen this thing trade yet. So it's very easy to be impartial. But I do like the idea behind these Target 15 ETFs. And I will say specifically, we have Target 15, Target 20, Target 25s, and the higher you get in that percentage, the lower you have for risk tolerance. So basically, a Target 25 is harder to maintain than a Target 15. So I like this 15% yield, which is what they're trying to get annualized. And then you also have some opportunity for growth. Now, I've also stated this fund is not even out. It will start trading live on October 8th. So depending on when this video launches, it will likely already be out. Now, I also want to talk about exactly, this is similar to ACI, the last video I did on the VistaShares ETF, but of course, we're targeting the Druckenmiller holdings. So what you're going to get is high monthly income, which is going to be 1.25% monthly. Annualized of 15% just based off of the yield alone, which is a very key component because this is an income-focused fund. But they also have they have a lot of boilerplate language. We have the data-driven options investment strategy. We have that you're going to have the full cap range equity exposure that can be considered a portion of the core equity allocation in a well-diversified portfolio. And one thing with Druckenmiller is he does have a large number of holdings. The last fund that I did for VistaShares ACI was a targeted, had like 11 or 12 holdings in comparison to this one that has substantially more. And last but not least, you're going to get the professional options management, which I appreciate because even though I do like options every once in a while, I cannot do it all the time. I get lazy, I get tired, and so I like paying the small fee to have that done, which we will talk about the fee for this one as well in just a moment. But that is it. This fund is for people that want some capital appreciation, but a primary focus on income, targeting that 15% annually or 1.25% every single month paid straight to your brokerage through these distributions. To truly understand his holdings and how this ETF will function, we have to look at the man behind the curtain, Stanley Druckenmiller. And one thing I like about him right off the bat is he's unique. He has a unique style where he's focusing more on his intuition and rigorous analysis over things that we're seeing that are more common today, like hype and crazy stocks that are running like mad, like Nvidia. And he also, when you look at his portfolio, it kind of showcases that. Again, it's not a lot of giant, big names that you're like, well, I could just buy Amazon and Nvidia and invest the same. He has a lot of different companies in there, some of which I had never even heard of before researching for this video. And again, he also, it's an interesting mix because he's opposed to diversification. He believes specifically in maximizing returns on high confidence investments, but he does have quite a few holdings. And so you might think, oh, that's counterintuitive, but he has some holdings that are a much larger position in the portfolio than others, and that is why. So he does believe in holding, I would say, a larger number of holdings, but focusing in on his high confidence investments that he, of course, uses his analysis and his intuition on. And of course, his analysis and intuition are going to determine how well this ETF does and how well his holdings do. And so I will showcase this ETF, it's 0.95% expense ratio. It is up there, but it's very consistent with what we've seen with these income ETFs. And you're also getting a lot more with this one because there are quite a bit more holdings. So there's been some crazy success in his career. And it's not even all specific to the stock market, which showcases the financial mastermind that Druckenmiller is. So he had a bet against the British pound in 1992. Yes, he is wildly up there in age. He is getting older, but we can learn a lot from these guys that have been in the markets for decades and decades. And so he basically shorted this also with George Soros. They shorted the British pound and they made a ton of money. Absolutely insane amount of profits. And then he went on to do some crazy investing during the dot-com bubble, where in 1999, after shorting internet stocks and incurring significant losses, he pivoted to buying tech and ultimately achieved a 42% gain that year. One thing that Druckenmiller talks about specifically is mixing things up, learning with new information that's available to you, not sticking to a mistake just because you made it. And so we see that in an instance right here. He was shorting these stocks, he was losing money, and he said, you know what? Now's the time. He bought them. He switched up his position. He wasn't afraid to do that. He went off his intuition and his analysis, which was originally wrong, but then showcased the right move by getting a 42% gain. And it's very interesting how he does. So he has more on top of that, but those are just two big standout things that he's done. What I really want to do now is showcase what is going into this portfolio and how have these stocks been performing. I never thought too much about this, but he just invests with an LLC. That's his business, which is wild. He's the fund manager. He has a portfolio value. This says 4 million. It's actually 4 billion. I double checked because his net worth is 9 to 11 billion. So it makes more sense for him to have a lot of money in this specific LLC in the fund. His current positions, he has 69 of them. We're going to cover them and a few others. So we can go on here. This is Fintel. Check it out. They have some cool info on here, and you can see his purchases and his decreases, what he's buying, what he's selling. But I want to get to the meat of this video and look at his top holdings, which again, I want to showcase. He has one position that's nearly 13% of his portfolio, of a $4 billion portfolio. Very interesting. We can see it's NTRA. Then we have Teva, which is a pharmaceutical company, which is very interesting as well. Pharmaceuticals, notoriously high risk. We have INSM, WWD, TSM, Taiwan Semiconductors. I'm a big fan of this one. We have Philip Morris, MELI, ENTG, CPNG, FLUT, and then scrolling down, we get to some more of the common names. We have DocuSign, Microsoft, Roku, and all that good stuff. But again, like I stated earlier, a lot of these funds are not common names. Some of them I looked up and I was like, oh, that makes sense. I've heard of them before, but I don't really know. And it's an interesting strategy. He doesn't just have a portfolio that's stuffed to the brim with the Mag 7, with Amazon, Microsoft, Apple, Tesla, Nvidia, and so on and so forth. So a very different style of investment. And what I like with that is, again, we're relying on his intuition and what he believes is going to do well, his analysis. But you're also having less overlap. If you're holding the S&P, or if you're holding, ACCI, or if you're holding QUSA, you have more diversification, which is very solid. I like more diversification. And even with this style of diversification where he has, 13% and 6% making up some large portions of his portfolio, it's one way of doing it. So we'll see exactly if it works out. But I threw all these into a calculator and let's see how these have been performing. So we are going to compare the top 10 holdings for this fund. And I will say the market has been very, very green, which gives us a little bit of an easier buffer, but still the returns have been phenomenal. I'm also not going to showcase exactly when he bought each fund. It's a little bit trickier to do on these. So double check, use whatever resources you have and see exactly when he bought them if you are interested in copying this Billionaires trades. Starting off, we have NTRA up 31.5% on the year. Then we have Teva up 16%, which is actually underwhelming. And then we go crazy with INSM up 130%. We have WWD up 54%, TSM up 61.5%. I didn't buy TSM earlier. I am kicking myself because of it. I mean, look at this return. And again, it's not even the best performer. It's second place compared to INSM, which I'm going to be doing a deeper dive into after this because I need to know exactly what's going on with that company. We have PM, which is up almost 35%. We have MELI, which is only up 11.43%, one of the worst performers. ENTG, the worst performer, actually down 16% on the year. And last two but not least, CNPG, CPNG, that was scary. This one is up 25.5%, and FLUT up 1%. So we do have one in the red and one barely in the green, and a couple in the green, but not enough for what we've seen this year. And then we have some that blew it out of the park, which really is pushing this portfolio into the green. I mean, having TSM, having INSM, boom, really held this thing up. And I mean, even some other ones still, WWD up 55, almost 55%. Very, very impressed with this portfolio. And I want your opinions, of course. Like I stated, it's a sponsored video, so a huge shout out to VistaShares for using my channel to just be able to talk about their ETFs. I really appreciate it. If you want me to buy this ETF and track it, let me know in the comments and give me your thoughts on if you're interested in these Target 15 ETFs. As always, thank you guys so much. If you like this video, check these out that are popping up on your screen right now, including my last video on ACKY, another VistaShares ETF. As always, thank you again so much, and don't forget to spread some love today.